Now this is actually a really good article from InfoWars, and it's basically talking about, you know, is there really going to be this crash, this big global economy, whatever, crash? We've been hearing about this. Are there economic waves of crashes that can be looked back throughout history, and do they make sense? Do they happen in a cyclical pattern, etc.? And the short answer is yes, absolutely, as a matter of fact. I'm going to read some of this to you. It's like 4 pages, actually. Credit goes to InfoWars. Does the economy move in predictable waves, cycles, or patterns? There are some, or many economists that believe that it does, and if their projections are correct, the rest of this decade is going to be pure hell for the United States. Many mainstream economists want nothing to do with economic cycle theorists, but it should be noted that economic cycle theories have enabled some analysis to correctly predict the timing of recessions, stock market peaks, and stock market crashes over the past couple of decades, and further than that. Of course, none of the theories discussed below is perfect, but it is very interesting to note that all of them seem to indicate that the U.S. economy is about to enter a major downturn. So will the period of 2015 to 2020 turn out to be pure hell for the United States? We will just have to wait and see. One of the most prominent economic cycle theories is known as the Kondratiev wave. It was developed by Russian economist Nikola Kondratiev, and as Wikipedia has noted, his economic theories got him into so much trouble with the Russian government that he was eventually executed because of them. The Soviet economist Nikolai Kondratiev was the first to bring these observations to international attention in his book, The Major Economic Cycles, produced in 1925, alongside other works written in the same decade. 2 Dutch economists, Jacob van Gelderen and Samuel de Wolf, had previously argued for the existence of a 50 to 60 year cycle in 1913. However, the work of de Wolf and van Gelderen has only recently been translated from Dutch to reach a wider audience. Kondratiev's ideas were not supported by the Soviet government. Subsequently, he was sent to the Gulag and was executed in 1938. If he was wrong, would he be executed? No, the guy's a wacko. He makes this stuff up, nothing ever happens. Or he's right, we're tired of him telling everyone what's going on, kill him. In 1939, Joseph Schumpeter suggested the naming the cycles Kondratiev waves in honor, or what you're going to find out is called K waves. In recent years, there have been a resurgence of the interest of these K waves. The following is an excerpt from an article by Christopher Quigley that discusses how this theory works. Kondratiev's analysis described how international capitalism had gone through many such great depressions, and as such were a normal part of the international mercantile credit system. The long-term business cycles that he identified through meticulous research are now these K-waves from this guy. The K-wave is basically a 60-year cycle plus or minus about a year. So 59 to 61 years. With internal phases that are sometimes characterized as seasons, if you will. Spring, summer, autumn, and winter. In the spring phase, so to speak, a new factor of production, good economic times, rising inflation. Summer, hubristic peak, war followed by societal doubts and double-digit inflation. Autumn, the financial fix of inflation leads to a credit boom, which creates a false plateau of prosperity that ends in a speculative bubble. Winter, excessive capacity worked off by massive debt repudiation, commodity deflation, and economic depression. A trough war breaks psychology of doom. And it says, increasingly academia has come to realize that the brilliant insight of Nikola, and accordingly there have been many reports, articles, these theses, and books written on the subject of this cyclical phenomenon. An influential essay written by Professor W. Thompson of Indiana University has indicated that K-waves have influenced world technological development since the 900s. His thesis states that modern economic development commenced in 930 AD in the Sung province of China, and he propounds that since this date there have been 18 K-waves lasting an average of 60 years. So what does this K-wave theory suggest for that's coming for us next? Well, according to work done by Professor W. Thompson of the Indiana University, we are heading into an economic depression that should last until about the year 2020. Based on his analysis of these long K cycles, that they have nearly 1,000 years of supporting evidence, by the way, if we accept the fact that most winters, that season thing in the K-wave, last 20 years, as outlined in the chart above, this would indicate that we are about halfway through the winter section of this wave that commenced approximately in the year 2000. Thus, in all probability, we will be moving from a recession to a depression phase in the cycle in about the year 2013, and it should last until approximately 2017 to 2020. That was this guy's theory on this. So we're already in 2014, and it's not exactly a depression here, so to speak, yet, right? I mean, so we got something. It's not here yet. Again, it's got to be right around the corner. This is 1,000 years of charts data every 60 years, pretty much, right on the money. Boom, boom. We're on that time frame right now. So he says, of course, the K-wave is far from the only economic cycle theory that indicates we are heading for an economic depression. There are other ones, like author Harry Dent also predicts that we are on the verge of a massive economic problem. He mainly focuses on demographics, and the fact that our population is rapidly getting older is a major issue for him. The following is from a book, from Business Insider article that summarizes, not a book, from an excerpt from Business Insider that summarizes the major points that Dent makes in his new book. Young people cause inflation because they cost everything and produce nothing. They're not working yet, right? But young people eventually begin to pay off when they finally enter the workforce and become productive new workers, or supply, and high spending consumers also demand. So they become a supply and a demand because they're working and buying and consuming, right? Unfortunately, the U.S. reached its demographic peak spending from 2003 to 2007 and is headed for the demographic cliff, as he's calling it. Germany, England, Switzerland are all headed there too, by the way, he says. Then China will be the first emerging market to fall off the cliff, albeit in a few decades. The world is getting older. The U.S. stock market will crash. Our best long-term and intermediate cycles suggest another slowdown and stock crash accelerating between very early 2014 and early 2015, and possibly lasting well into 2015 or 2016. The worst economic trends due to demographics will hit between 2014 and 2019. The U.S. economy is likely to suffer a minor or major crash by early 2015 and another between late 2017 and 2019 or early 2020 at the latest. The everyday consumer never came out of the last recession. The rich are the ones feeling great and spending money, and as asset prices, not wages, are aided by monetary stimulus. And again, there's very few rich people and a lot of the rest of us, so that's not stimulating anything. That's not people becoming active in the economy, buy, selling, and that kind of thing, when only the rich people have the excess money. The U.S. and Europe are headed in the same direction as Japan, a country still in a coma economy, precisely because it never let its debt bubble deleverage. The only way we will not follow in Japan's footsteps is if the Federal Reserve stops printing new money. The reality is stark. When dyers start to outweigh buyers, the market changes. It all comes down to an aging population, he says. Fewer spenders, borrowers, and investors will be around to participate in the next boom. The U.S. economy, or the U.S. has a crazy amount of debt, and economists and politicians have acted like we can just wave a magic wand of endless monetary injections and bailouts and get over what they see as short-term crisis. But the problem, he says, is long-term and structural. It's demographics. Business can dominate the years to come by focusing on cash and cash flow being lean and mean, deferring major capital expenditures, selling non-strategic real estate, and firing weak employees now to prepare for this. The big four challenges in the years ahead will be 1. Private and public debt, 2. Healthcare and retirement entitlements, 3. Authoritarian governance around the globe, and 4. Environmental pollution that threatens the global economy. According to him, you need to prepare for the crisis which will occur between 2014 and 2023, with the worst likely starting in 2014 and continuing off until late 2019. So just like the Kondrativ wave, or the K wave, Mr. Dent's work indicates that we are going to experience a major economic crisis by the end of this decade, not looking at the same things. It's a different view. Different stuff he studies, these demographics. Another economic theory, cycle theory that people are paying attention to these days is the relationship between sunspot cycles and the stock market. I mentioned this the other day. It turns out that markets peak, and when they peak, they're very closely lined up with the sunspot activity peaking on the sun. This is a theory that was first popularized by an English economist named William Stanley Jevons. Sunspot activity appears to have peaked in early 2014 and is projected to decline for the rest of the decade. If historical trends hold up, and they have shown that so far, that is a very troubling sign for the stock market. And of course, there are many, many other economic cycles theories. Here's some other ones. Charles Nenner. I've watched this guy's videos on YouTube a few times. He's been on some, like, Fox News or CNBC, giving his little sunspot theory stuff, and he's got a pretty good track record. He says stocks should peak around mid-2013 and then start their fall until about 2020. Similarly, bonds should peak in the summer of 2013 and fall thereafter for 20 years. He bases his conclusions entirely on cycle research. He expects the Dow Jones to fall around 5,000 by 2018 to 2020. So he expects it to fall to around 5,000. It's at 16,000 plus now. The Crest cycles. The major 120-year cycle plus all minor cycles trend down into late 2014. The stock market should decline hard into late 2014, according to this guy. The next one, the Elliott wave. Robert Precher believes the stock market has peaked and is entering a generational bear market. He anticipates a crash low in the market around 2016 to 2017. Next guy, market energy waves. He sees a 36-year cycle in stock markets that is peaking in mid-2013 and will cycle down for 2013 to 2016. The controlling energy wave is scheduled to flip back to negative on July 19 of this year. Equity markets should drop 20 to 50%. This is interesting about that July date, because remember the other day, this Indian astrologer guy that has an amazing track record on calling it gold prices and things like that, based off of his astrological charts that he studies, says watch July of 2014. That's the time to watch what happens with gold. So starting then, look after that. Pay attention to gold. He said, I don't know what it is, why it's going to be, how it's going to be, but it's a big thing. And I've checked twice, and it's showing gold and precious metals. He says I would not recommend anybody being short in the precious metals market around July of 2014. He's not listed on here, by the way. Next guy, Armstrong. You probably heard of him. Armstrong Economics. His major economic confidence model projects a peak in confidence in August 2013, a bottom in September 2014, and another peak in October 2015. The decline into January 2020 should be severe. He expects a worldwide crash and contraction in economies from 2015 to 2020, somewhere around there. And then we've got this last one, cycles per Charles Hugh Smith. He discusses 4 long-term cycles that bottom in the 2010 to 2020 period. They are credit expansion contraction cycle, price inflation versus wage cycle. Well, slash, let me reread that. He discusses 4 long-term cycles that bottom in 2010 to 2020, that period. They are credit expansion / contraction cycle, price inflation / wage cycle, generational cycle, and peak oil extraction cycle. So does history repeat itself? The bottom line is that there's a lot of information out there that you can grab at any moment in time. We now have the internet. We've had it for, 15, well, more than that. I remember getting high-speed internet for the first time in my life when I was on dial-up somewhere around 1998 or 1990, maybe 98, I don't know. But even then, the internet was nothing like it was or is today. It was brand new in the 1990s. And now that everyone has it pretty much, the amount of information nowadays is incredible. All these things are out there. The only issue is how does an average person that doesn't know anything about this stuff even go out and find it? You don't even know what to look for. Who would know to look at astrological cycles in the stock market? Or who would know to look at the sunspot activity versus stock market cycles, booms and busts? Who would know that? How would you even know to go look at that? All right, the average person is going to say, let me contact a financial advisor. Let me see what they think about this. And then you contact the so-called experts, and they tell you it's the best time to be in the market. The market's never been higher. This is great news. And in reality, that financial advisor hardly has any kind of education in financial advising anybody, and just took a very basic test to get him certified so that he can work for a company that is a financial advising company. So now he all of a sudden is a financial advisor. It's kind of reminds me of some of these certifications you have in the IT world, or the company I work for. They sell Avaya phone systems, business class phone systems. And if anyone ever needs a business class phone system, contact me. I'll get you a little discount on it, whatever. If you have a business, this is not a home phone. This is not a cell phone. Business phone system, multiple incoming lines. 4, 5, 6, 7, 10, 20, 30 handsets, whatever. Versus not versus, but for your office personnel. But anyways, we sell these phone systems, and every now and then, you gotta go get certified. There's a new thing, and we need your support team to have, at least one of your guys has to have this certification. So one guy can get the certification, but everyone else in the company, now we can still say, hey, we're such and such certified, because one guy's got the certification. Okay, but what about the 3 or 4 other guys in his department? They're still handling support tickets and issues without that certification, but he's got it, so that's okay. And even though he's got it, all he did was study what he needed to study to pass this little mini test, get him a certificate. I mean, is he really all of a sudden an expert? You got one certificate in one little category of troubleshooting these phone systems, which are pretty elaborate nowadays, by the way. All of a sudden you're an expert? No. We all know that it takes a lot more than reading and studying and passing a quick test to become a real expert. But that's not the case in the financial industry. These people just get hired, make my commission. I have a paper in front of me or a computer screen that tells me, here's the performing assets of the low risk ones, the medium risk ones, and the high risk ones. Talk to the person, determine what their age is. If their age is over this, what their salary is. If it's between this and this, then you just offer them the low risk one because they're older, But the young people, you get any young people in here, tell them you want high risk most all the way. You can put a little low risk, but give them mostly high risk, because even if the market crashes, they'll be young enough to where it'll rebound in their lifetime for sure while they're working, and it'll make up for what it lost, and the higher risk will make it up quicker. So that's the rule. That's the expert. That's the expert telling you. And if you ever sat there on the phone or in front of one of these guys and said, yeah, but I was looking at the sunspot activity on the sun and noticed that it's peaking. It already peaked in early 2014, and from what I can tell, that means the stock market's gonna crash. They would look at you like you're some kind of moron. They would say, are you serious, or are you just messing with me? Oh no, I'm dead serious. Okay, say that again. The sunspot activity is going low on the sun, and it's going to cause a crash. How does that happen? Like, where did you get that from? Why do they look at you like you're some kind of moron? And then you can go back and say, well, hold on a second. let's look at the solar activity. We have that data for decades now. Let's see how it correlates to the stock market. And sure enough, you see a correlation. The bottom line is, I don't care who believes in it. I don't care if they don't want to even see it. They want to stick to their programmed, bullcrap. Here's how you make a sale, and that's all you're concerned about. You're not really concerned about this person's future. Just make your sale, make your commission, and sell them on down the road of investing in the stock market. All I know is what I know, right? And the things I just shared with you are multiple different sources, right? You got the solar activity. You also got this Indian guy who wasn't mentioned in that report, talking about July would be a fantastic time for precious metals, but you've got these other, multiple guys I read, all these different people, basically saying roughly the same time period. And that is literally 2014 to 2020, somewhere in between there. And for the most part, it looks like it's sooner rather than later, or even in the middle of that time frame. It's more like 2014 to 2015, based off of the majority. And I think all this time I've had to accumulate silver. What if these things did happen in 2008, 2009? There was no major, trillions of dollars of bailouts and TARP funds, all this crap. What if none of that happened? And it just went straight into, depression right then. Of course, we would probably recovered by now, by the way. But I would not have, and a lot of other people would not have been able to have the opportunity to buy silver while it was cheap and have to live through this depressionary time. Because during a depression, people are not out spending and having extra money to buy silver. No, in a depression, you're pretty much struggling. You may have to move in with some family, whatever, and help pay the bills until you get out of the depression and then start over again. Then you can move back out, get your own house, get your own place, right? The boom cycle starts again. People quickly forget about it, the depression, and let's just party again. Me, on the other hand, we haven't had that depression, but I've read all about the real depression from 1929, seen what happened then. I don't want to live through anything like that. I don't want to see that. I don't want to be a part of it. So that's why I chose to go with silver this whole time. It's the only thing that I feel, gold too, but silver is going to be better because they've pushed the price down more so than gold. Sure, gold can double easily, maybe triple, but can silver only double or triple from 20 to 40 or from 20 to 60? Not a chance in the world. It's going way higher than that. And I'm telling you right now, the day will come when I say, guys, I just bought a house free and clear today, and I didn't have to sell all my silver. Or maybe I did, depending on the house. If I had the most amazing, $500,000 house somewhere, 30 acres, 40 acres, 100 acres, 200 acres, whatever it is, and I got that, and the only way I could basically get it, in other words, was by selling my silver. But it was the absolute dream house. It had everything I wanted on it. It was away from the city. It was the perfect location. Just whatever. It made me pull the trigger on the house. Yeah, I'll come out and tell you, I just sold all of my silver. All my debt's paid off. I have a nice house nowadays that I feel comfortable in. It's got multiple bedrooms for my family. Everything's good. Or you might hear me say, I got a nice house, not that nice, but I got a decent house and only had to sell a third of my silver to get it. So I went ahead and bought a second one for rental purposes, or in case anyone in my family, like my sister, my parents, or something like that, get to live in a place basically for free during the depression. Imagine that. Imagine if my silver could do that. Man, would that be awesome. And I remember back in the day, the Weimar Republic and whatnot, those days when that hyperinflation and all that was kicking in and people were cashing their checks, and before the next few days went by, they were already buying as much food and supplies as they could get their hands on, because the dollar was getting devalued, before they could even spend it all. And I remember that somebody, probably more than one person, bought a house with one gold coin back then because of what happened. 1 gold coin. Here you go. I'll buy that house. Thank you. Even at $5,000 gold, let's say it goes to 5,000. Could you imagine? Oh, you're gonna find a house for $5,000 right now that's livable, that's decent? No. You're gonna find a complete wreck that needs to be torn down, if anything, for $5,000. So, whatever the case was, wherever this was, and I believe it was Weimar Republic, someone bought a house for a gold coin. I'd like to take a little handful of silver coins one of these days and do the same thing. And get back on here and say, I told you so. And I hope every one of you can write back and say, hey, we can tell you so too, because we did the same thing. And then we could all have a nice little chat about it. How awesome it was. How we stood the test of time. And through all these price manipulations, year after year, we saw the writing on the wall. We still knew what was right. And we still fought through it and kept buying and buying and buying all these years. And the longer they lasted by pushing the price down, the longer we were able to accumulate more gold and silver. And again, I'm a silver guy, not gold. So, just want to share that with you. Looks like it's coming. Looks like the big thing is coming. And keep in mind, what did Lindsey Williams just get done saying the other day? My elite friend of oil guy, oil cartel, former oil cartel elitist, he and his wife just got back from vacation or being out of the country. And he told me they're taking drastic measures in regards to the economy and nature, effective immediately. When I know more, I'll see if I can get more from him, and I'll let you guys know. That was his message. Taking drastic measures in the economy and in nature. Okay, so they're going to cause hurricanes to be steered into places. Oh, we had an economic recovery. It was very fragile. And these 3 hurricanes hit. One hit Florida, one hit New Orleans again, and one hit maybe Texas over here. It was just enough to knock the recovery off track, and now we're going into depression, stock market crashes. Guys, we tried, it was working. Mother Nature did it, guys. Don't blame the bankers, don't blame us. Even though we can steer these things nowadays, and people don't know that. Just like they steered Hurricane Sandy right into the 55 Water Street building, which houses $36 trillion of all stocks, bonds, certificates, etc. that was flooded. How does a vault not be... I can buy a safe today that is flood, waterproof, fireproof, and everything. A regular safe. Are you telling me that an extremely expensive vault that is housing $36 trillion worth of assets inside of it, they forgot to waterproof it and just fireproofed it only? Or did someone leave the door wide open? That's the question. We're going to find out one day, and that day is nearing. I still don't know how it's going to play out, but the answer is going to be, we'd like to help you. We would like to show you this information, Congress or investigative committee or whatever it is. But these items were flooded out by Hurricane Sandy. And what's Congress going to say? Well, it was an act of God. Congress isn't going to say, we know you can steer storms. We know we have the technology, because they don't know they have the technology. It is being kept from Congress because these black operations, black projects are the ones that get all the money, create these things. The bankers and friends are the ones that get the information on this. They're the ones that have these private companies that all of a sudden become military contracting companies that then make these items or have the money to have the projects and whatnot to create these kind of incredible technologies. And then when they use them, I imagine if you had a technology where you can point something at a tree and it just falls over. Just point it, press a button, tree falls over. Who in the hell would ever think you could do something like that? It would be absurd. So they never would. But if there was really technology that did exist that could do that, but it's way beyond the current thinking or technological level of our species even able to comprehend, because we don't believe in it, we don't have the theories to back it, we would never believe it. We wouldn't even go there and think that it could be done. Yet, when you give billions and billions and billions and billions of dollars to anybody, scientists or anyone, they're going to create stuff and find things that you don't know about, the rest of us don't know about, new theories, new physics, whatever it is, that none of us know about. So however they steer these storms, we know that they can do it. And from the looks of it, it looks like it's that HARP system out in Alaska. But the bottom line is, watch the weather. Because if Lindsay said they're going after the weather now, why would they have to do that? Are they going to cause storms in our enemies' territory? Oh, Ukraine and Russia, let's start hammering Russia with crazy storms. Maybe they will. Maybe that's what he's talking about. Or maybe what I said originally. They're going to cause major destruction in America, blame it on Mother Nature, say that was why the economy failed, so that no one gets pissed off at the bankers and the politicians. And man, are you going to be mad at God? God? Did you do this to me, God? It was an act of God, God. Why would you do this, God? Well, it happens. Can't be mad at God. Can't cuss at God. Can't cuss at the trees. Oh, I'll just... darn my luck. You know, my own luck is what that becomes. When in reality, somebody did it. And they used it to blame the economic depression that's coming. I can't wait to see what it is. What they say is the reason the depression happens. Can't wait. Take care.